Let's get into Amazon, Tesla, Palantir.
Armor Fund. Good to see you, Joe. Rebecca Walzer is worried about a big sell-off. I mean, she's been talking about 30% sell-off since, I think, last month. She's worried. She's worried about China. She's worried about global demand. And so she sees some big sell-off. At the same time, I have so many guests who are risk on. Where do you stand?
Yeah, the risk on trade is because there's a lot of optimism. There's a lot of potential stimulus coming in next year. I think the market's really pricing all that in. That does certainly pose a big risk. Of course, the higher we go, the bigger the risks are. I don't really want to fight this trend so much, but I got three names here, which are stocks which I love for the long haul, which are just flying high right now. I've got some ideas on how to get into them. I don't necessarily want to buy them, jump into these levels right now if I'm initiating a trade. I maybe want to raise my stops if I'm being long some of them, but I got some ideas how to get into them just because waiting for a pullback is really what I really would love to do. But at the same time, volatility is there. We could still see upside surprises in these names, even at these high valuations.
Okay. And I know you have a few of the Mag 7 here. Let's talk about Tesla first. Some of your thoughts on Tesla.
Yeah, well, so we're still seeing this explosion of growth in electric vehicles. The core business of the company still has a bull case for it, of course, but they have so many other things going for them now. Just the innovation and the vertical integration of all these things. We know about the AI. We know about the potential in the robotics, their automated technology. So yes, I think all of that is kind of like the bottom line, the baseline. Of course, people are anticipating a friendly relationship with the new administration could be beneficial too.
Yeah, understood. Okay, let's see what Rick Duquette has to say about the charts. Rick?
Well, in regard to risk on versus risk off, discussions, it's more fun to be a bull. And you can see here that we have just been blasting off through many important technical levels here.
Tesla moves not technicals. Tesla moves off sentiment, and Tesla moves off of what's going on with the actual business. Those are the two things that really affect the stock price. And then the third thing would be the options market, not technicals on a chart and drawing lines.
There's been such a mixed bag as to the new administration that maybe less regulation. They'll do a fast track for full self-driving and autonomous, but at the same time, maybe this administration wouldn't be as open to subsidies and such for Tesla and EVs and the like, and also the tariffs. Where does that fit in? So it seems like there is a little bit of a push and pull in the story, but there's still a lot of Tesla bulls out there. Final thought, Joe?
Yeah, pullback in subsidies for EVs, maybe that hurts some of the other car companies more than Tesla, given their competitive advantage where they already are in the space. We'll see how that plays out. But yes, I totally agree. My trades would be something along the lines of selling a downside put, looking at the 300 level, looking out to March, and then buying an upside call spread. Pairing that together, maybe collecting a little bit of money, gives me a couple of ways to play the name. Yes, I'd love to buy it down at 300 if it pulls back, but because I sell that put and do a call spread, I'm able to get into the name. So actually looking at the March 335, like 420 call spread, and I can sell the 300.
As a Tesla shareholder, so many people are on hopium, man. Hopium. Like straight up, they don't even understand anything about Tesla. It cracks me up. They think the EV credit going away is somehow a good thing for Tesla. Talk about hopium. No, as a Tesla shareholder for like 100 years now, I can tell you, no, it's not good. If they get rid of that EV credit, it's bad. I can tell you if an average person that makes $60,000, $70,000 a year wants to buy a Tesla and they see there's a $7,500 credit they can get for buying that Tesla, right? It's a very good thing for Tesla. You take that away and it makes the chance that somebody goes buys that car a lower probability. There's no way you can, like people want to try to justify this like some other way. As a Tesla shareholder that understands the company extremely well, I'm just telling you, it's not a good thing. Like anybody that tries to shift that as this is a good thing for Tesla, they're going to be getting rid of the $7,500 EV credit. I'm like, what are you talking about, man? That's just like crazy. People are crazy.
The downside, I'm collecting like $10 to put that on. So yes, that's how I'm playing it. If it pulls back, I'd love to buy it. The race is higher past 335. I want to be in it too.
Okay, let's talk more about Amazon here, which is at new highs this week. Some of your thoughts on where this could be headed?
Yeah, so this is just a continuation of the cloud dominance that Amazon has. Yes, they own the retail business essentially in America. Everyone is buying everything off of Amazon, so that business is going great. But their really growing business is their AWS. It continues to grow. The more and more people start utilizing AI, more companies jumping on board. They're gonna have the AWS there. People are going to need to be on clouds, whether theirs or Microsoft's or another. So I'm fully on board for Amazon continuing their upward trajectory. As long as the economy stays strong, they're going to do fantastic, and that's just another way to get into the game. Without being worrying about, are they going to be the AI winner? Are they going to have the right software? They don't need to have the right, large language model that people like, but they do have the cloud, and they're going to win no matter what.
Yeah, the latest that they're really beefing up is telehealth and some low price hair loss drugs. For men in particular, but an anti-aging product. So, Amazon, no, it says the headlines today, and so there is nothing that Amazon doesn't do. It's amazing. Let's see here, Rick, at the chart, please.
Yeah, from my understanding, that scared a lot of Hims shareholders today. The bottom line is, anytime Amazon does anything, in any industry, it freaks a lot of people out. So if they see Amazon being a threat to Hims, like, people are going to get very, very scared of that. It's always the way it's been in regards to Amazon. Amazon announces they're going to go after something, people freak out. If Amazon said in 2025 we're going to take tools and we're going to take construction materials and those sorts of things extremely serious next year, I can tell you Home Depot stock and Lowe's stock would be down 5-10%, if not 15% the next day. That's all Amazon has to do. We're going to take this very serious. We're going after this industry hard. Home improvement, we're going after that hard next year. Those stocks would crash like anything.
Final thoughts here, Joe, on that. Thank you, Rick.
Yeah, couldn't agree more. And that lines up very nicely. If you go out to March, you can put on a call spread and sell a put, collect some money. 200 we said was support. I'll sell that put. 215, 230 call spread. I'll be able to collect money to get into that name. We said 230 might be an upside target. So yes, that's how I'd be playing it if I'm entering a trade today.
Yeah, I mean, it's just been unbelievable run too, right? It's up 45%.
So to the investors watching this, he's talking about, I'm going to sell call and put, blah, blah, blah. You don't have to do all that. You don't have to do all that as an investor. I don't bother with any of that, right? And I do just fine for myself. And also, did you hear the word choice he used? If I was looking to enter this as a trade. It's a different thought process for these traders than it is investors, right?
1 year. Okay, next up, the darling of Palantir, which just recently hit some highs as well. Where do you think this could be headed? It sounds like you've been riding the momentum wave. You don't want to give it up too quickly.
Absolutely. It's another darling. It's another, one that did very well following the election. They had a very good earnings report. Don't get me wrong. I think that's exactly why the stock's doing so well. And they just continue to grow. They have government entities. They have, enterprise sectors that are just continue to grow. They're 40% customer growth year over year. So that's just been the amazing story for me, is that their customers just continue to grow. Now they have an enormous amount of cash on hand. They have about $5 billion of cash on hand, which makes it unique when it comes to growth companies. Usually growth companies have a lot of debt while they're working through their growth problems. But yes, they have so much cash on hand where they have these boot camps where they're bringing on new customers. At some point, they could say to themselves, hey, this is the time. This is the year people are going to be looking at this type of software now. We're going to be able to add more customers. At some point, they could take that cash and just do a crazy hiring spree where they're hiring more people to grow their customers faster. So that's one of the reasons why I love it. Is you're just kind of waiting and biding their time. It's gonna be another explosive growth for me. It's because they have that cash on hand. They can hire those people. So that's very exciting. Now that said, being at $62, $63, that's a very high, very lofty. It shouldn't be so surprising if there is a pullback in the name. So that'd be another thing I'd be looking at, maybe adding on a pullback.
Yeah, you got to always keep an eye out for in regards to stocks when there's going through a fundamental change in the business model. So something I was talking about in regards to Palantir in 2023 was they were going through now a fundamental change in the business model. And the fundamental change was it used to take them a 6-12 month sales process to try to acquire a customer, right? It was a very lengthy process. But when they started the boot camps, AIP boot camps, that changed everything. That was a fundamental change in the business model because now they could show a customer Palantir, introduce them. They had no clue about Palantir. And within a day or a few days, that customer now could understand what Palantir could do for them. Like that. It's a fundamental change in the business model if you can take a sales cycle from 6, 12, 18 months down to days or weeks. I mean, your business model is going to be changed. It's going to completely change where your growth rates are going in the future. That's something I kept calling out again and again last year, right? And obviously, we've seen that play out because their growth rates have been, you look at the last 4 or 5 quarters for Palantir, acceleration in growth rate, acceleration, right? And we're probably going to have another acceleration this next quarter. Don't be surprised if revenue growth is 32, 33% next quarter versus this past quarter, it was 30%, right? So, it's just a beautiful, beautiful thing. Now, the valuation's gotten extremely rich on Palantir. There's no debating that, right? And so we're pricing in a lot of future growth, and that's the one thing that sucks in regards to stock now. But as a shareholder, it's beautiful to see, all this stuff come to fruition. And now the only question for me with Palantir is where's the top at for revenue growth? That is my only question. Are we going to top at 32, 33%? Are we going to accelerate to 35%? Could we hit a 40% number? And that's all I'm trying to figure out now at this point in time. Because the rest is history. It's beautiful, and the profitability is exploding for the company. Woo! Very, very exciting. Very obviously great stock to be a shareholder of. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. All right, let's hear about Amazon here.
Trade today with your new tie is what?
I like this new tie.
You were very proud of it.
I really do like it, but okay, that's just
very
me.
Proud of it.
I also like a name that name that Joe mentioned earlier, Amazon. He's a little mad at me. He says I stole this from him as a final trade. You should feel complimented that I agree with you.
Okay, Shan?
Industrials.
Yeah, so Amazon, as far as if we look at Amazon valuation here, let's go to projections on 1000x and let's type in Amazon and let's run some numbers and you can begin to understand why Amazon's still, just a tremendous opportunity. So Amazon around a $2.22 trillion market cap roughly, right? So we could run Amazon at like a 12% revenue growth rate. Obviously, that's considerably under what Amazon's been growing at over time. Now, as far as net income, that should grow much more rapidly than top line. I would probably say like a double up is a pretty safe assumption when it comes to that, which then puts net income margins at 13%. Keep in mind, you're going to see Amazon's margins likely increase dramatically over the next many years. And I'm talking about net margins specifically. And the reason being is it looks like Andy Jassy and the team's going to really keep costs down in regards to employee count. Additionally, what's happening is the two most meaningful businesses are becoming that advertising business, which is advertising straight profit, and Amazon Web Services, which is also extremely profitable compared to the e-commerce side of the business. So it's so funny. An Amazon Prime truck literally just pulling up in front of my house as I'm talking about Amazon. This is hilarious. So let's run Amazon, at like a 35% low end PE here. Okay. We'll run it at a 35, which is pretty dang low for Amazon over time, and up to like a 55, which keep in mind, Amazon many times runs 50 plus in regards to PEs. And what you're going to see here is, we're talking about 19% CAGR on the low end, 33% on the high end here. Let's tame it down a little bit. Let's say 10% revenue growth. Okay, 10% revenue growth, which would get them. I think they're going to be over $1 trillion. I think 2028 will be the first year they'll be over $1 trillion of revenue. And then let's run them at a 20% net income growth number here, and let's see what we get for our numbers here. So then we're at about a 15% CAGR if you're valuing at about a 35P, which once again for Amazon is very low, especially for a company growing 10% top line, 20% bottom line, and 29% CAGR on the high end, right? And then you say, what if Amazon gets back to some very nice growth over future years? Let's say the advertising business is booming, AWS is booming, and e-commerce is booming. Let's say consumer gets in a better spot. So let's say they do they get up to like a 28% net income growth per year, right? Which is definitely a real potential. And if they're growing at that, you're going to value them at least at 45 PE there. There's no way you're going to value them only at, not for Amazon, not for those sorts of growth rates, right? And we could say to like a 70 on the high end for Amazon, right? I mean, if they're growing 25% plus a year, bottom line, so then we're getting a CAGR of 30% plus on the low end and 46% on the high end. So, in several different scenarios, like Amazon's a buy across the board. It's just a question of how much money are you going to make in Amazon over the next 4 or 5 years. That's really the only, argument. Amazon, no doubt, is a moneymaker over the next 4 or 5 years. It's just a question, is the compounding annual growth rate like a 10%-ish number, 15%, 20%, 25%, 30%, 40%? That's the debate. And there also should be no debate if Amazon's going to outperform the S&P 500 over the next 4 or 5 years. Absolutely. Like if you told me I had to go all in Amazon or all in, the S&P 500, I'd feel much more comfortable being in Amazon, especially if I was from a frame of thought about getting the best return profile, because Amazon should significantly outperform the S&P 500 over the next 4 or 5 years. Okay. All right, let's get into this one now, trimming Microsoft, because I thought this would be an interesting discussion around selling stocks.
Since Election Day, but not everything. And by not everything, I don't mean things like staples or utilities. I mean things like Microsoft, for example, which is up, but only up 2% since the election. So that looks weak relative to some of the other gains that we've seen. I bring that up because you trimmed it. Which I thought was a pretty interesting move. Why'd you do that?
Well, it's just clearly not the leader right now. And I'll extend that to say that the Mag 7 in general is not the leader right now. You can look at Apple as another name in that space. But I also want to say that the Mag 7 should no longer be looked at as a monolith that moves together. There are different forces. There's different business models in there. But just to go back to Microsoft specifically, I think at this point in time, everything that we think we're going to know about AI has to be priced in. This is a good, year and a half, 2 years since ChatGPT really hit the ground running. I'm sorry, about a year, a little over a year. At low 30s multiple, I think it's all priced in. And I'm not selling the name entirely, because I think as the market goes up, something like this, which is a huge part of the overall market, is going to benefit from passive flows. But there are other areas of the markets that are working really well right now. And Shannon, you alluded to the broadening of the market. Think about industrials. Think about financials. Think about things that haven't worked as well, but probably will. And I'll put healthcare in that category.
You said that they're not going to, be viewed as a monolith anymore, but you spoke of them as the monolith when you say, well, AI is all priced in, because you could think that maybe it's priced in for Microsoft, but there are many suggestions that it's not priced in even to NVIDIA, which reports next week, right? So you can't have it both ways. If it's not going to trade like a monolith, then don't refer to everything as a monolith in terms of what's priced in and what's not, because there are standouts, ones that are still suggested to be that, and then ones that where in fact maybe some of it is priced in.
Yeah, so let me be clear. I don't think they're a monolith, both in terms of different businesses, okay, so that, for instance, Netflix is not the same business as Microsoft. But your point, I think, is excellently made.
Netflix is not one of the Mag 7s.
No.
Nor is it. Why'd you pick Netflix?
Okay, you want to pick Tesla? I mean,
well, no, I'd like to pick one of the
one that's working
hyperscalers
right
for
now.
AI. Let's talk
guys,
apples and apples.
All right, you don't need a two-on-one.
Let's talk apples and apples.
Okay, let's talk apples and apples. I will grant you, I think NVIDIA is fairly priced here, and I'm not trimming NVIDIA. I will also tell you I'm not trimming Alphabet right here, another AI name, because I think at the valuation, it's absolutely underpriced, and I think that's a name you can add to here. So if you want to stay within the AI space, absolutely, there are names that I think are not going to move symbolically with each other. I think Microsoft, and we've already seen it, right? We've already seen, look at NVIDIA versus Microsoft. They're not trading the same, and they're not going to trade the same. Look at Oracle versus Microsoft.
I think on through the end of the year is the one name
I love Amazon.
of the Mag 7 that will outperform.
Yeah, that's my prediction. There's still my prediction from like a month ago. But so here's how I would think. Like, let's say I owned Microsoft stock, which I don't. But let's say I owned it and I was trying to figure out, like, should I take some profits on Microsoft? Let's say I did really well over the last couple of years, right? I would kind of be thinking about valuation-wise. So Microsoft, this one's been growing EPS, in expected to grow EPS somewhere between the 12 and 17% range in revenue, around 14, 15%. So let's go ahead and run some projections on Microsoft, right? And we can begin to understand, first off, Microsoft, we got to think about the business model. Is the business model in any major disruption? I don't really see that, just to be quite frank. So let's run them at a 14% revenue growth, which is pretty high. I'm not sure they're going to be able to hit that over the coming years, but let's say they can, right? And they should always outgrow revenue in regards to EPS, so in net income. So I would say like 18% when it comes to net income growth, right? Now, since they're growing at those sorts of growth rates and it's SaaS, you're going to easily command a 30 to a 40 PE ratio. And that's easy peasy lemon squeezy, okay? So it's very fair. And you get a really attractive compound annual growth rate over the coming years, right? So let's tame it down a little bit. Let's take it down to 10% revenue growth, okay? Take it down to 10%. So this would be kind of a more of a bear scenario. Let's take this down to 14% here, okay? Take this down to 14%. And we'll keep the P's same, 30-40 range, right? Then you're talking about compounding annual growth rate on the low end, about 10%, on the high end, about 18%. And that's in more of a bearish scenario, right? I like that. I actually think Microsoft's a fair buy here. I don't think it's the best buy in the stock market, but I think it's a fair buy. And if I held Microsoft stock, I would still feel very comfortable holding that stock, right? But that's how you really need to think about, like, if it's time to sell a stock or not. If you can run numbers several years out and you still get a very attractive compound annual growth rate, even in a little bit, let's call it more tame situation, a little less bearish or a little less bullish situation, it usually makes sense to hold those stocks. If it's not a very attractive return profile over the next 4 or 5 years in a base case or certainly in a bear case, then it just doesn't make sense to hold on to that stock, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Pin comment down there if you're looking to access all my premium courses, Becoming Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery if you're looking to get access to my private Discord chat, see the stocks I'm buying and selling, my $2.8 million plus Fidelity account now at this point in time. There will be a pinned comment down there. We're all booked out for this week, so we'd have to see about potentially getting you in maybe next week, okay? Much love and have a great day.